Hello and welcome to this video. Today I'm going to be doing a stock analysis on Lyft. Now if you like this video, please don't forget to leave a like and subscribe. And of course remember, this isn't financial advice, this is purely entertainment and educational purposes. Now I have to say I'm not that huge a fan of Lyft, simply because of how big Uber is, their main competitor. If you don't know what Lyft is, it is a company where if you download their app you can drive for them. It's really quite simple. Now Uber is 9 times the size of Lyft, which is why I really don't like Lyft compared to Uber. Just given the fact that because Uber is so much bigger, they have so much more cash, which means that chances are they can make initiatives that just gain them even more market positions, or maybe they just end up buying Lyft. Who knows? Or maybe they end up squeezing them out of the market. Now, as you can see, currently we had this huge bounce recently because we have great earnings on May the 8th, as you can see right here. We had nice earnings, 26% up, which also why we have this huge increase. But as you can see, also just overall, this stock is very, very volatile. As you can see, it's up and down and down and up all the time. Now, they do, however, make quite nice earnings. Sometimes, as you can see, this was up by 1,831%, which is insane. I don't like it when companies surprisingly show this, because that just means they really didn't know how to expect how much they were going to earn, and I really don't like it when a company does surprise that much. Also, as you can see right here, even though they're surprised by 1000%, as you can see, the stock barely jumped at all, which of course is also another thing analysts really don't like, is when the company guides so poorly, as you can see. Then we have another one here with it a bit better, but still by 57%. That is a bit too much if you ask me. And as you can see, all the time it is up by quite a lot. Now, if we go back, as you can see, currently it's trading quite low, so it was all the way back up in 44 back in January of 22. Sometimes we do see huge outbreaks. A interesting one is back in, I believe as you can see right here, in early 24, with this huge jump on earnings. That was because an intern misplaced a comma point, which meant investors thought they were going to grow 10 times what they were going to grow. And that is also something I really don't like to see in companies. And I'm not making this up, you can go Google it. It is something that really happened. Now, as you can see, the company has a market cap of 7.1 billion, so it's not a small company, but it's not a large one either. It is sort of a small to mid-sized cap. Now, their earnings are quite decent. As you can see, they are consistently making money now for the first time ever. As you can also see down here, they really didn't make any money until 24, which is the first year they made money, and that is a bit better to see them actually make money instead of just losing money every year. Now, they are of course growing their revenue each year, and they are diminishing their income loss. And they did actually have positive net income in 24. Let's hope they can do that again in 25. So quite interesting at the moment. Now, as you can see, they don't pay out any dividends, and they never really have. Now, the performance on this stock, as you can see right here, all the way back from 2019, is a bit all over the place and really not that great. 22 minus 75%, 2019 minus 45. As you can see, overall, just really not that great. We do see some years with great gains, but it has been on publicly traded for 6.5 years now, and as you can see, 4 of the years is negative, which of course really isn't that great if you ask me. So as I said, I really don't like the company compared to Uber, as the competitor is just way too big. Now, for the technicals on this, as you can see, for the day it's a buy, and for the month it is still a buy. Of course, that is because, as you can see, we are increasing upwards right here, and we did see a golden cross back here on the, when would that be? The 29th of April. We do see this upwards momentum really gaining, and then also this huge bounce when they made positive earnings. And we are currently trading upwards here in the RSI, which is quite nicely, of course. Now, the analyst rating on this really isn't the greatest, and then it isn't the worst either, because as you can see, we have 16 strong buy, no buys, and then 32 holds, 1 sell, 1 strong sell. It's quite interesting that we have this many holds and this many buys, and the average is still downwards, even though it's not trading at the peaks where it was in 24 or back in 22. So it is quite interesting that the average is still down from where we're currently at. Now, we are of course trading a bit high. As you can see, we were trading lower and even much lower 24 and earlier at 25. As you can see, in March of 25, we are trading us up almost 60% from that point. So of course that is high, but I don't think the stock is going to grow more this year. I completely agree with the analysts on this. I think it is going to end about 12, maybe 13. So really not that huge fan of Lyft at the moment. And as you can see, I don't like it when companies, this many analysts has hold on a tech company, as Lyft, if you like it or not, Lyft is a tech company, as they're just an app which lets you drive around and earn money. So it is purely a tech company. And if there's not a great strong bias on tech companies. I don't like them. I really don't like them. So yeah, that was my stock analysis on Lyft. Now, if you did like this video, please don't forget to leave a like and subscribe.